Hello everybody and welcome to Investment Station. Today I got an awesome episode for you as I'll be going through the 6 steps that I usually take before I invest in a cryptocurrency. Now these steps are meant to ensure that I don't jump into some sort of scam and to make sure that I invest in a project that has potential to grow and multiply in the future. Now, obviously nothing that we talk about here is financial advice, and anything that we cover is for educational and entertainment purposes only. Now, if you're interested in investing, if you want to learn how to make more money with the money you got, or if you like property, stocks, and crypto, if you're into that sort of stuff, please subscribe to the channel as I'll be making more videos in this sort of realm and releasing more content and hopefully giving you more value. So, let's jump into the video. At the end of the video, you'll be able to see a summary of the sketches we do today, so you can always refer back to this video, jump to the end using the timestamps below in order to refresh your memory. So let's kick off with our first step, volume and activity. If I was applying this step earlier on, I could have saved a lot of money while trading crypto. CoinGecko is a fantastic website to get technical information about different cryptocurrencies, and that's what we'll be using for this video. So in order to find out the volume of the cryptocurrency, you just scroll down and get to the graph area, and then you select the time period that you want, which I selected 180 days. You can see the blue line is the price of the crypto, and the black lines at the bottom is the volume. At the top of the page, you can also see the volume that has been traded in the last 24 hours. So what you want to look for is consistent volume. So volume that is continuously traded around the same area per a day, and also consistent growth in the volume. You also want to be aware of pump and dump action. So if you see a crypto that's pumped all of a sudden out of nowhere, that could be a scam. So that should be a red flag for you. So don't jump into those coins where you see this huge black stick out of nowhere and then nothing for a few months. Link is a good example of a cryptocurrency that had healthy volume growth. So as you can see in the maximum timeline, which started in 2018, you can see that the volume was consistent, being around in the millions before 2020, and then in 2020 it started growing to the 2-digit, like 20 million, 30 million, up to recently being in the billions. So in summary, you want to look for a crypto that is trading above $1 million per day, that has consistent volume, consistent growth, and it doesn't have that pump and dump action. Now moving on to the next step, let's look at exchanges. Now at the time of this video, there's probably around 450 exchanges out there. Now just like volume, this is also a fairly simple step to go through. So let's check it out. I'm just using Bitcoin for this example. You basically go to CoinGecko, you scroll down again, and then you can see all the different exchanges that coin is listed on. The more exchanges the coin is listed on, the more potential it has, because it has more exposure to different traders using those platforms. Being listed on different exchanges also means that there's more confidence in this cryptocurrency, as more trading platforms accept this crypto and are willing to trade it. You can also take the time to check out if the crypto you are looking at is actually traded on the platform that you're using to exchange cryptocurrency. If it's not, that means you might have to open a profile in a different exchange in order to buy that crypto. In comparison to Bitcoin, I just want to show you another project called Phantasma. As you can see, this project is not really listed on many platforms, so therefore there's less confidence in this crypto project and less exposure to traders online. Also, if a crypto is listed on Binance, that usually is a good signal, so also watch out for that. In summary, the more trading platforms the crypto is listed on, the better. So let's jump into the next step in our research, which is one of the most important ones, and is about whether the crypto is actually solving a problem. What sort of value does it provide to the marketplace? There's no real technical way to look at it, but you got to apply your own judgment. Just like Facebook, Amazon, Netflix, you need to see if the project solves a problem and it has potential in the future. If you want to brainstorm a project you are looking at, just comment below and I'll try to get back to you. Now let's look at our next step. The team! The team is really important. If you don't have a good team, you're not gonna win. Just like any company, you need to have a good team behind it in order for the project to succeed. Usually the crypto project team is listed on the website, And if it's not, that should be a red flag for you. I'm just using Injective Protocol for this example. Now, what you want to do is basically go on the website of the crypto you're looking at, look at the team, and jump on their LinkedIn account. When you're looking at their LinkedIn account, you want to look at the same things you would look as if you were to hire the person. Their experience, their credentials, their endorsements, which companies they worked for before, if they had the right experience for the role. You will be surprised how important this step is. There were a few occasions where I was researching different cryptos and the LinkedIn accounts of the team was quite dodgy. They didn't have a lot of experience, they didn't have any credentials, or they didn't have endorsements from different people, and in summary, something just didn't feel right. So I decided to skip on the project. Other than the LinkedIn account, you also may want to look at the tweet accounts, if they have interviews on YouTube, if the team is present. Basically, if the team is not there and they're not showing their face and not showing their milestones, that should be a red flag. So in summary, you want to look at how the team is displaying itself to the marketplace and the investors. So let's jump into our second last step, which is tokenomics. This step could get a little complicated if you don't know what you're looking for, if you don't have prior experience in the crypto space. But I will try to make it easy for you to understand. When the crypto project launches, it usually allocates a number of cryptocurrencies to different sectors. So if it allocates the majority of its tokens to the team, that is usually a red flag, because then the team can manipulate the market as they're the majority holder of that cryptocurrency. Now in contrast, if those tokens are being allocated to the public through mining or other incentives, then it means that the team cannot manipulate the market and there's more control to the public and the people that hold that token. Usually 20% allocated to the team is a healthy percentage. The next thing you want to look at is if the cryptocurrency is deflationary, has a hard cap, or inflationary. Usually if it's deflationary or has a hard cap, that's a good sign, because the token quantity will either decrease as time goes by or have a limited supply. So technically, from a market supply and demand perspective, that usually means the price should be going up. Now if the token is inflationary, you should check how many of those tokens are being created every year. Usually a 5% is a good rule of thumb, but if it's more than that, beware, because that inflation rate could dilute the value of that token. And the last thing you want to look at is how the token is actually being used on the platform. Is there value for that token in that project? Usually if there's a lot of technical use for that token on that project, like being used for paying fees or for goods or for services, then you know that you have a token that is backed up by some sort of value from that project. There is much more for tokenomics, but in a short and simple way, these are the main things I believe should be checked out. Now moving on to our last step, which I believe is very simple to do, but also very important. So consider this one of the crucial steps to take. The media controls everything. It controls what we think, how we see things, who we vote for, what we should buy, what we should be doing on the daily basis, what is right, what is wrong, what is normal. And that's the same thing for cryptocurrency. You want to make sure that the cryptocurrency you are looking at has good media coverage, which means good YouTube videos that are bullish and show a positive incentive for that cryptocurrency. It means good news articles, so if you go to Google and type in your cryptocurrencies, that news that show up first are positive with good incentive. You can also check out other social media networks and find out if the project is actually making milestones, if they're finding out new partners, if they're getting new investors, if they're getting new exposure in other countries. These are all crucial to finding out whether the project is going somewhere and you got yourself a winner. Influencers also have a big role to play in the cryptocurrency space. I mean, look at Elon Musk and Dogecoin. Every tweet he does basically makes it shoot for the moon. I know, for example, that a project that I'm invested in called Injective Protocol has Mark Cuban supporting that project. Now, I'm not saying every project you look at has to have an influencer, but if you have one, that is a really good positive sign. And that's all we got for today, folks. Thank you for staying tuned until the end of the video, and I hope to see you in the next one.